Thanks so much for tuning in to Talking Point. I'm your host, Niraj Shah. The Talking Point today are the views of Mr. Dharmender Kapoor of Birlasoft. They came out with a quarter wherein the revenue numbers, you could argue that would have largely been in line. I think the concern, if any, that comes out is on the human resource front, on the bottom line front and the margin front as well. Yes, the margins came off a little bit, but nowhere close to maybe what a few people anticipated they would. Attrition rate has picked up, as I said, but the more important thing is keeping all of these pieces of the puzzle. What does he believe would happen in the second half of the current financial year? And talk a little bit about the nature of the deal wins and the visibility, which, by the way, looked pretty interesting. Mr. Kapoor, great having you. Thanks so much for joining in. Hope all is safe.
Yes, good morning, Niraj. Yes, absolutely, everything is safe. Things are getting better post-COVID. And now that we have started coming back to office, at least the leadership team, it is looking much better than what we expected a quarter back.
Okay, interesting. So let's talk a little bit about the quarter gone by, Mr. Kapoor, then I'll talk about the future, or maybe we could mix the two as well. But let's first start with the top line. I mean, 3.2% USD revenue growth was maybe subpar considering the expectations and the bar that you set. I think most people lead this to maybe moderation in the non-top 20 clients because of which this happened. How would you assess what happened in quarter two and maybe the first half?
Yeah, so if you look at the quarter two, our growth was, if you look at the constant currency, it was a 7.2% quarter-on-quarter growth for us in the constant currency. And if I look at the Forex impact also, even then it was 6.7% quarter-on-quarter growth for us. And if you look at year-on-year, it was 18.4% for the same quarter last year. So the growth momentum definitely has picked up very well. If you compare the quarter one and then the quarter two, the kind of growth that we are getting, we definitely see that the growth momentum is picking up. And in fact, for last 4 quarters, we have been growing quarter-on-quarter consistently. And I don't see any reason why we would not be continuing to grow in the next couple of quarters also, because I definitely see the momentum is going to remain. I definitely see that the pressure that is there coming from the client side in order to pick up the engagements and deliver it quicker than before is going to remain. And that definitely is going to put some pressure on the talent supply chain. That is what we have seen in the last 2 quarters as well. But we are in a good position because it is a good problem to have. Because if demand is not there, then there are many other pressures. But when the demand is there, that means that the growth momentum will remain. And that is far more important, because when it comes to the talent supply or when it comes to the margin, it is far easier to manage that than managing the momentum.
Okay, so when you say growth will be there, I mean, I have no doubts that growth will be there, Mr. Kapoor. You're doing very well and the building blocks are in place. The question would, if at all, be only on what do you believe the extent of the growth would be. Now, I know you've already said that you still reiterate your billion-dollar company guidance, I believe, by FY25. Second half, do you reckon we'll see an encore of what's happened in the first half, or could it be slightly different because of the year-ending activity, furloughs, what have you?
So, quarter three is always a mixed bag, because there are a couple of unknowns that are there, and that puts pressure on the top line as well as on the bottom line, because there are furloughs, as you mentioned. At the same time, the number of days are lesser because a lot of holidays in India as well as in our other geographies. So that is there. But I would still believe that it will be far better than what we have seen in the quarter three of the previous year or previous few years. So it will definitely be better than that. Yeah, so that is what is more important, because there is a seasonal element that is there in the quarter three that will definitely play a little bit. But more important is that what is the budget that we are going to see for the coming year, because our quarter three is also the quarter four for most of our clients, because their financial year begins from January. And right now they are working on a lot of budgeting exercise. And that budget will decide the tone for the next year as well as next couple of years. So far, I have heard only the positive things, that there are going to be far more opportunities because clients are definitely going after the cloud related opportunities or digital related opportunities, because they do want to not only get into those opportunities, they also want to transform their business model. And I think that relates to a shift in the industry that is happening. And when I'm saying shift in the industry, IT definitely, because we are the service provider to them. But every single industry is going to turn into a bigger shift as they look for the newer business model. They want to be available for their clients in a far more quicker way. Okay, they want the e-commerce to be adopted much faster. Even those clients who thought that they do not have to depend upon the digital technologies, now they believe that the only way to survive is to actually go and adopt the digitalization as soon as possible. At the same time, what had been the entry barriers few years back are the one becoming a challenge for the companies who are not ready to open themselves to their competition, to their customers, to their partners. So most of the time, what had been the entry barrier today is becoming a constraint for that very company. And they are moving to the cloud and they are saying that I need to open up my company. I need to break my boundaries. I need to look at the business value chain where I can get the advantage by looking at the process that is cutting across companies rather than looking at the business process within my organization alone.
No, that point is well taken. So let's assume that the medium-term outlook is looking good, and we'll talk about that in a bit. And therefore, maybe since you brought that up, let's shift the focus onto the deal wins. Now, when I looked at what you did this time around, I believe you got a large $20 million deal as well from a new client, if I'm not wrong. The overall numbers also look pretty decent. What was the nature of the deal wins? What was the one standout part? And could the momentum, by virtue of the seasonality factor, dip a little bit in quarter three?
Yeah. So I think there is another shift that I should have mentioned before, but I can answer that as part of this question, is the kind of deals that have started coming. Okay. If you look at whenever there is a shift in the business model or shift in the way clients are adopting the transformation, the deals will be far more transformational in nature or projects in nature. Okay, because run the business is continuing as it is, and the spend will shift to the transformation. And when the spend shifts to the transformation, the money is spent on the projects rather than the long-term engagements. And that is the reason that you will see that most of the wins that are going to come, they are going to be smaller deal wins, but they will provide you better revenue because the ACV will be higher, whereas the TC will be lower. That is one shift that is happening because of the transformational nature of the wins. Second is the clients are becoming also smarter because they know that when technology is changing very fast, they do not want to put the bet for 3 years or 5 years. What they are looking at is that can we modularize the deals also? Can I close a deal, let's say for 6 months or 1 year, and if everything is going great, that is when I'll sign a larger deal. Or maybe I will sign multiple deals as string of pearls rather than one large monolithic deal. Because once you sign a large monolithic deal, the clients also say that they may have to go and negotiate again at some point of time. Or even the service provider will have to negotiate at some point of time, because the talent supply is right now in a spin, and the rates are going to revise, the cost of the resources is getting revised. So it is in the interest of both the client as well as the service providers like us that we sign a deal that can be renewed after some time rather than signing a very long deal and closing the rates on the lower end for the long term. Okay, So from that perspective, if you look at the deals that we will sign, the total size will be smaller, but your revenue growth of quarter on quarter will be higher because ACV size is bigger and better.
So are you saying therefore, Mr. Kapoor, that don't look at a metric of how many large deals were signed, because that will not determine growth necessarily?
Correct. Absolutely.
And that's true only for a company of, that's true only for a company of your size, or true for companies smaller than you as well as larger than you? Just trying to figure that out.
No, it is true for every company. Even if you look at carefully the larger companies, when they are signing a very large deal, it is not as if it is a newer deal. Okay? It is a renewal for the work that they were already doing. Okay? So if you look at the worldwide, the outsourcing has been done to a great extent already. So expecting that the client is suddenly waking up to the outsourcing, that is not going to happen. Okay? So there are going to be renewals. Now, what can happen is that it is either renewal of your own deal, or you may have displaced someone else. Okay? For example, for one of the deal, we have displaced another player, okay, in winning that deal for us. Now that also can happen, but that would mean that someone will lose and some other person will gain. It is not the new revenue that is coming on the floor. It is the same revenue changing hands. That is what is happening at that time.
That's a bit of a revelation, because the last few months, and while your point is well taken that IT is now all pervasive, but there's a belief that because of this digital first nature of business, more and more companies, while they may have been introduced to tech in a small way, will have to expand their tech presence, and therefore, while the company may be the same, the nature of the work will multiply multifold, and that will lead to years of sustained growth. You don't believe that?
Correct. No, the sustained growth will be there. And I'll give you one simple example. Whenever you're doing a transformation, whether it is in the enterprise solutions or cloud adoption or digital adoption, the transformation eventually will become run the business or run part after the transformation is complete. Okay, it will get into the support and maintenance. So your support and maintenance bucket will also continue to grow. But right now, if you look at the wave that is there, because this wave is very different from the normal wave that we have seen it before, because there is a pressure that has built up due to the risk factor that is there in the industries. And that risk factor got introduced because of the pandemic.
COVID, yeah. Sure.
Okay. So because of that, there is a sense of urgency that I need to move to the cloud. I need to become digital as soon as possible, because if I was digital or was on cloud before the pandemic, it would have been easier for me to continue to run the business without any impact. Okay. So there is a sense of urgency because of that it is the mitigation of the risk rather than really looking at the incremental benefits that we are seeing. The incremental benefits are transformational. The adoption speed could be different for different companies in the normal circumstances. But right now, because of the sense of urgency, everybody is hitting upon the road and saying that I need to become digital as soon as possible, because now it is a matter of survival.
Got it. So you reckon this $140 million number, don't look at it as what is the percentage of large deals, because a lot of it could be small deals and that could increase going ahead. My question is largely, could quarter 3 see a bit of a dip, or do you reckon that the average rate could be maintained at these or slightly higher levels? Because I'll tell you why I'm also asking this to Mr. Kapoor. I read a comment in one of the brokerage notes which said that while the ACV remains robust, but the reported TCV is not quite reflecting the strength on a YOY basis.
Correct. So which is what I mentioned earlier, that the TCV is going to become smaller, the ACV is going to remain better. Okay. And that's the reason that we are seeing the growth. And I think it is a good trend, to be very frank, because a lot of time when you sign up a larger TCV, okay, then there is a dip in the beginning for that particular deal and you gain it later on. Whereas ACV is far more consistent in giving you the revenue from the day one. Okay. So from that perspective, it is not a bad trend. It is a good trend that is there. Now, whether quarter three will be dipping a little bit, I do believe that there could be same or little bit of dip, but it will not be very different for simple reason that quarter three generally is the budget decision. And it is a very unpredictable quarter for simple reason that there are certain customers who would have already exhausted their budget. And then there are other clients who would want to exhaust the budget within the Q3 and will actually go and give you the deals. Okay, so probably it will balance it out and we might land up at the same level.
Got it. Okay. You reckon this average rate though will move up in the quarters to come for you to hit $1 billion in 3 years time, right? 3 years, if I'm not wrong.
Correct. I believe that quarter four should be much better. Okay, from wins perspective and the revenue perspective, because there will be fresh budgets that will be there on the table also.
Got it. Okay.
That is one thing that is there. Then if I look at the continuing momentum, I believe that the pent-up demand that came from the previous year, okay, I'm talking about the 2021, okay, that pent-up demand, which the projects that were closed during the pandemic are done in this year, okay, the year that is going on. And that is the reason that you're seeing the pent-up demand and the new demand coming together and suddenly the demand is overblown. I believe that it should become more consistent for the next couple of years. It will be better than before. When I'm saying better than before, 2018, 2019, 20, it will be better than that. So it will be consistent, far more consistent. And that would mean that it will soften the attrition that is there today and soften the demand of the skills also. Okay. But we will have to go and transform our talent supply chain. Okay. Because we want to all catch the momentum that is there for the next couple of years. I believe that in the next 2 to 3 years, as the adoption of the digitalization happen, there will be newer need and the higher order of transformation that many clients would want to have. Because many of the clients would say that I am going for the digitalization, but not as much changing my business model. But a couple of years down the line, most of the clients would say that this is the business model that is given. Okay, they cannot say that I will change a few things but not change the business model. For example, will there be every product sold as a service? Chances are very, very high that every single product will get into a model where you can go and take that product based on the monthly payout or annual payout rather than paying upfront for that product. So the way the revenue is claimed, the way profitability is looked at, the way you go and bill the client and receive the money, all is going to become different. Okay, so the whole business model itself will change for many of the companies to come. And that, in my opinion, should generate next set of transformations in the ERP space or any other enterprise solution space. And I think that will then catch the next level of or next wave of momentum also.
Very interesting. You're saying that a lot of products, and maybe it is applicable to a lot of tech products, would get into this bundled services kind of a model, wherein I don't sell you a product, but I send you a product plus service for 3-4 years or stuff like that.
That's right. One is that the tech products, I'm talking about, let's say when you're buying a car or when you're buying a washing machine or a refrigerator for home, that today comes at EMI, but then it will not be an EMI. Okay. Will you come up with a model that after every 3 years, I will replace your refrigerator, or after every 5 years, I will replace your refrigerator? The way today it is done, lease purchase or lease for the cars, it may happen for many of the products. So the whole business model will have to change, keeping that in mind.
Wow, you see, I mean, I saw that, for example, in a tablet called Remarkable in the US, but I haven't seen that happening for too many other electronic products. You've seen that happen across the world?
It will happen.
It will happen.
It is not there with too many products right now, but that's what I'm expecting, that once you have gone to e-commerce Okay, once we have seen that the companies such as Amazon are going to disrupt this whole entire whole industry, then everybody will be forced to think in that direction and change their own business model.
Got it. Okay. That could be interesting. Let's see. Time will tell. Mr. Kapoor, I've taken 20 minutes already. How much time do you have? Do you have another 10 more? I mean,
Sure,
just wanted to talk about. Okay, great. Okay. Can we talk a little bit about the attrition pressures? Because they have certainly moved up. I know I heard you say that they will ease up, but it might be difficult to time that. What happens in the intermediate period? Would margins stay soft? Would employee costs necessarily stay higher? And do you reckon attrition could come off, or will it spike even more before it cools off?
Yeah, no, I think there are various theories that are there, and nobody knows what happens in the future. So one can only give opinions. Okay, so I will give my opinion. First of all, I said that it is a good problem to have. When the demand is high, it is very obvious that there will be pressure on the talent supply that will happen. It is a much better problem to have than there is no demand and you don't need resources. Okay, so from that perspective, I think we are in a good position. Having said that, this pressure is definitely there. There is one opinion that I have that by December, some softening will happen because your pent-up demand will go away. Okay, largely it will go away, and that means it should soften. Second, it will further soften it by end of March. Okay, now it is still a question whether it is going to come back to the normal or not, because there is a other pressure that gets created is that this is getting changed forever, because your work from home has become a reality. Okay, at the same time, the adoption of work from home in India is far more acceptable today than it was 2 years back. Okay, so that will shift the model for us also. So I don't think that we have to only help our clients transform, we have to transform ourselves also. We have to transform our own talent supply chain, because what are the roles that are more conducive to continue to work from home? What could be the HR policies that we need to adopt so that we can make it comfortable for them? What could be the project management techniques that we need to adopt so that we are far more sharper the way we go and plan for our clients or for our projects? Okay, I think those are some of the things that will emerge, and we have to look at and be prepared that even when people come back to office, about 25% of the people will continue to work from home. And we need to define what are the roles, what is the level of experience that will continue to work from home. I would give thanks to the pandemic that it has introduced newer technologies and newer tools that we can use in order for us to go and adopt that. But more important is that going forward, we will have to look at how the whole thing converges together so that it becomes a far more sustainable model. Right now, I don't think it is a sustainable model in our minds, because while people are working from home, we still think that everybody is going to land up in the office one day. We don't know which that one day would be. Will it be next month or will it be in January? Okay, it is going to be gradual, that is right. But what percentage will continue to work from home and work from office is yet to come up, where everybody agrees to a model that it is consistent, it is predictable, and it is sustainable. I think that time is yet to come. And I believe that as soon as people start coming back to office, that model will emerge and will get settled for every single company.
You will want to get all your employees to office, because the 12 months ago it was like, oh, 75% will work from home. Suddenly maybe attrition pressures or maybe work camaraderie or whatever, but IT companies are now saying no, let's get them back to office.
So I never said from day one that 75% will work from home.
Yeah, not you, I'm just saying.
Yeah.
Whatever 50,
I know
75, whatever.
Different opinions. I always said that about 25% people will eventually work from home. 75% will have to come back to office. And there are multiple reasons for that. Okay. One reason is that not every home is adequate enough to work from home. Not everybody has an office at home. Okay. Second, the network situation, that the quality of network is not very consistent across cities. Okay, that's the second issue that is there. Third is, our business is people business. Okay, and we need to do a lot of R&D, innovation. Okay, and we had to discuss the ideas, and a lot of whiteboarding is required. And there are not enough tools that you can do whiteboarding on while you are on video conferencing.
Sure.
So I don't think we can take away the value of people connect. And hence I believe that 75% people should work from office, 25% people can continue to work from home. And there will be some people who will be flexible. That means that if 1 or 2 days people are working from home, we should not be worried too much. We should be able to plan it in such a way that it is good and more productive for the person to work from home, because the person is not distracted on that day.
Sure. Okay.
We will have to design the work elements and work packages also accordingly.
Okay, that could be interesting and be really interesting from a human resource angle as to how this works out. But thanks for that insight, Mr. Kapoor. My final question, really, as you've given me so many wonderful insights in this interaction, is about Birlasoft itself. I believe I read somewhere in one of the notes that you stand by the target that you had given earlier of reaching $1 billion by FY25, and you believe you would want to scale up the EBITDA margins or the EBIT margins, one of the two, to 18%. Can you talk a bit about EBITDA margin? Okay. Just wondering, what could be the roadblocks to this, or do you believe that as things stand, you are well on your way to do it? Maybe you could even advance the targets, the timelines, if you will.
Yeah. So I think we are very much on the mark right now, both from the top line perspective and bottom line perspective. The bottom line currently is taking hit because of the current situation. Okay. So that is the only thing that probably I would say that in intermediate term, we may face a little bit of challenge like any other company, but eventually we know that when we are $1 billion, we want to be 18% EBITDA, and we know that we can achieve that because we reached to 16.9% in the Q4. So we know how to do it. Okay, it is only that in the short term, probably we are seeing this challenge. Now, one is becoming $1 billion. I know this question continues to come, that what is going to happen next quarter and the H2 and the next year. I think I have always maintained that for a company, it is far more important to have two things. One, that are we becoming sustainable or not with respect to our growth? Okay. And second, are we becoming predictable or not? And I always said that to be sustainable and predictable, we need to continue to get quarter-on-quarter growth. Okay. And continue to deliver margin above 15%, because sometimes we will go and spend higher because we want to invest, because we are a smaller company. And when the technology is shifting a lot, we have to look at long-term perspective and sometimes take that hit and go and invest that money on the short term. Okay, so that is something that we will always have to look at. So from that perspective, I believe that today we are a very sustainable and predictable company. And I think that is far more important. Sometimes there could be a growth 0.5% higher or 0.5% lesser. I'm sure that's part of the game that continues to happen. But so far we remain sustainable and predictable. I'm sure that market would love us and will continue to reward us, with all the attention that they would like to give it to Birlasoft.
Alan, we wish you all the best for that. And may the attrition issues come back to normal sooner rather than later. Thanks so much for joining us today, Mr. Kapoor, and all the best for the second half.
Thank you very much, Niraj. Thank you. Great talking to you.
Lovely talking to you. Viewers, thanks for tuning in.
Thank you. Bye.